How did the whole Adani episode over the last few weeks shift the mood towards India, if at all? I mean, do you think it has done anything to color the judgment of global investors that you may be speaking of all the time? Were they rattled? Were they shaken by this episode?
To some degree, there were heightened inquiries, Udayan, and we fielded a lot of questions as well from our global investors on implications. We had, client calls and webinars and whatnot. So there were a lot of questions, and there were worries of spillover, contagion risk. Can it, bring down the Indian markets? Was one of the concerns. But I think as Indian markets have held up quite well, by and large, and the broader EM has pulled back during this time as well, and Indian market hasn't necessarily even underperformed over the last 3 weeks or so. I don't know the precise numbers, but just thinking through my head, I think Indian market might even have outperformed at least month to date by small amounts, but it is very different from what was feared about, underperforming quite substantially. I think those fears have receded, Udayan. Now, hardly anyone is asking about, the contagion effect of the developments on broader Indian markets.
That contagion actually was feared, Prashant, largely on the lenders to the Adani group, many of which were actually public sector banks. You've always been a big supporter and owner of the private sector financials. When this episode happened, did you feel vindicated that you were not such a big owner of the public sector financial space and you've always restricted yourself more or less to private sector financials?
So, great question again, Udayan. I want to be mindful of what I say. I would say, look, in this case, I think from what the comments and statements that have come out from across the banking sector, I think there's the exposures are nothing out of the ordinary, and the reason to own more private sector over time, and we continue to as a team, like several of the private sector banks, is that the alpha opportunity that we find there is a lot more compelling than at public sector banks. Though those public sector banks have also done very well over the last couple of years. So vindicated might be a strong word, but yes, we continue to like, for a variety of reasons, private sector banks.
When you say private sector, is it the trinity of the big ones with ICICI, HDFC and Kotak, or have you gone down the ladder and looked at some of the smaller private sector names?
So I'll say more broadly, well-run private sector financials, and there are some non-banking financials as well. Obviously, Udayan, as you know, I can't speak about individual names, but we have in our portfolio several non-banking financial companies as well. The idea is that, in banking, you have to have strong liability franchise. With some of the larger banks that you're talking about, they have very strong liability franchise that contains your cost of funds. If your cost of funds are low, you can afford to be picky about the asset side of the balance sheet, and you can pick the right risks if you're doing your job well, executing well. And even with a lower yield on assets, you can generate more than adequate profitability once you have a strong liability franchise. In case of NBFCs, the liability side is not as big a differentiator, but if you develop a strong niche in certain asset category, as several of these strong NBFCs have done over the decades, they've developed mastery in a particular asset class or more than one asset class, be it in consumer durables, be it in automobiles, be it in gold loans. I'm not saying we own each one of these, but there are different NBFCs who've developed strong execution expertise in these niche areas. They can, even if their cost of fund is in line with other NBFCs, they can generate outsized returns for a long time to come.
If you like the video, do like, comment, share and subscribe.